Hey, hey, hey! Hello, Drippy Gang, traders, noobs, apes, and everyone else. Welcome to Drippy Verse. This is Drippy, your source of options drip on a daily basis. Here we talk about some of the most exciting setups based on the options flow, technical analysis, pattern analysis, macroeconomic events, and current market structure. So if you want to make some dandies, stick around. My goal is for all of you to achieve financial freedom and create life changing wealth. So, I'm not a financial advisor, so manage your own risk. These are just my ideas. I may not be or maybe in some of these positions, but manage your risk, take your profit. I use unusual whales for the flow, so if you want to sign up, use the link in the description below. And without further ado, let's begin with today's agenda. I'm going to talk about 5 setups. All are bullish setups based on flow, macro, TA, everything else. Let's dive in. We don't have a lot of time today. So first one I want to talk about is ABBV. It's ABBV. Now I already told about this company in my Spaces talk just a few hours back. And if you look here, first, the big news, FDA approved the VUITY, the first and only one. First and only one is very important because that means they have the complete market share for this. So you can only imagine the revenue they'll get through this one, right? And age-related blurry near vision, which a lot of people have. So kind of hard to guess, what the market cap, how much market cap would increase. We need to deeper dive into fundamental analysis, which I can't do right now, but this is a really good news. The earnings were solid. Earnings transcript, double digits revenue, multiple segments, and this company is a biopharma. And if you look here, very similar pattern last year around 30 October, and you can see here the SMAs crossed over, EMAs crossed over, and it gapped up, and then since then it ran almost 36% in 45 days. And so this stock can do that, gap up. Usually it's a slow mover. We need to evaluate like the swing potential here. I don't think it's a good for intraday setup. Sure, it might be, but I think a good risk reward would be an entry around 112, but I don't think we'll get that. Let's see if we can. Another good entry area would be around this area, 113.5. It's a previous support area. I'm expecting it to kind of consolidate around this area for a while, maybe 1 or 2 days. There are 3 possibilities. First, either it sell the news and it dumps, then the setup is invalid, but the squeeze is fired to the upside here. Second, it drops around to this buying area and then we buy here our calls. I'll go over which calls to buy. And then finally it gaps up and goes all the way to 117, and in that case the best option is to buy December calls and probably 120 calls or in the money calls because it already gapped up, and then you can add to your position if it goes down. Because if you look here, if it gapped up next day, try to had a little bit of sell-off, tested this support area, this previous resistance and support, and then jump from there. Ideally would like to see something like that happen. So don't just jump in, wait to see price action. And this broke out on a strong volume, and this news was related to FDA approval, or not this one but the other one which they're working on. But keep in mind that they increased the dividend by to 8.5%. I think it's all here in the news. You can read about this, and that's gonna start in next February. So it's around here, January and February. Payment date is in February. Last date is 13 January. So usually there might be a run up until then. These are the price targets for, I'm looking for December, so which is like month out. If you want November calls, stick with 120. That's a reasonable target for end of month. And for December end, 135, 140 is a reasonable target. Just looking at the past history of the stock, which is around 25%, it's possible, but that's kind of like a little bit of a optimistic target, but it's has done in the past, so we'll evaluate based on that. And very quickly going through the profit potential and stuff like that, I'm not going to do for all the stocks, just for this one. So let's say that you're buying November 26th calls for 120 call, and you go to profit loss. Let's say your stop is 113.5, that's minus 30%. Let's say that your profit target is 120, that's 196%. And if you do same for November 19th, your profit target is 300%, and then your risk is 30%. That's pretty good risk reward. A very solid risk reward in this case. Now let's say that you purchase December 17th 125 call, and it goes all the way to $40, which is my price target. So if that happens, that's 2450%, and if it goes by December 10th, that's 3354% profit, on if you buy it now, and just the current price, not like gaps up and stuff like that. I mean, this number varies a lot, but keep in mind the risk as well. As you're going further out of money, the risk is increasing, reward is increasing as well. So in my opinion, best is to just distribute your calls. Buy for December 10th, buy for November 19th. As you buying closer to the expiration, try to get near the money instead of far out of the money. IV is pretty good here. So overall, I think a pretty solid swing play. Let's look at the flow here real fast. So this is ABBV here. I've added last week or 4 days here. Premium is 50,000. Bid and ask, none of them are checked here, so both, and out of money only. Now what this will give us is that applying these filters here, you can show the charts for a specific filter, like it shows chart for this filter here, and you can see the premium here is 84% bullish, with all the calls definitely bullish premium, much higher than the bearish one, and the calls target are 115. For the I think 115 is that spread which I was telling you, which is almost like a 3 million here, 3.5 million here bullish spread. But if you look actually at the flow history on Friday before the FDA approval news, you can see here this is a big spread. This was around 3 o'clock, and you can see here this is almost $7 million spread for 115, which is not too far, which is still out of money. And December 17th, so this is a big whale. This is probably institution money, not even hedge funds. So institutions are behind this one. Let's ride it. Let's ride the train. So I already told you my analysis. Don't jump in. Wait, and if it gaps up, try to be closer to the money. If it pulls down, then you can buy like closer to the expiration, very similar to how we played Nike. Okay, let's move on to next one here, Under Armour. Now Under Armour earnings are coming up 2nd November. I think what's going to happen is that it's going to retest this area 21.3. That would be a great opportunity to buy the dip on this one for $25 calls, $23 calls. My target levels are 23 and 25 area, around this area. Very similar to how Nike chart was. Under Armour is a strong retail name like Nike, very similar. The squeeze just broke out to the upside. If you look at the flow data here, for Under Armour. Similar settings here. Nothing has changed. This was on 27th. This is 27th and 29th, and you can see here this was a spread. And then there if you look at the overall flow here, you can see that for last week it's 80% bullish, and strikes target as $25 strike with the maximum premium here. And then to be honest, 5th of November is right here, and this is an earnings play. This could lead to a very, very nice profit for us. If you look here, UAA, if you look at the $25 calls for that's way too out of money, so the risk is high. But if it goes to $25, that's almost 500% profit. But also look at the risk here. Just evaluate what your risk tolerance is and go accordingly. I think, in my opinion, it's better to go for November 19th. IV is still high, 72%. IV, as you go far out of the money, IV will decrease. So will your reward and risk. So I think we can play it, safer. By not just YOLOing our money in it. Better to be safe. Let's look at last couple of days, bullish premium 81% here, and also 60% is not bad. 31,000 calls, which is almost 3 times the average volume on 30 days. If you look at today's breakdown here, not significant, but the other day was. And also if you look here, $25 for 5th of November, the volume is 10,527, which is amazing. And in some of these might be sold calls, but overall premium is really bullish. But keep an open mind with this one. It's an earnings play, can go either ways. Let's look at the other one, which is GS, which is Goldman Sachs. Now GS, look at this chart here. It's a strong accumulation here, earnings gap, and then the volume is decreasing here, and dividend is coming up, and the flow has been phenomenal just for all the banks here. Look at all the charts. Bank of America about to break out, Morgan Stanley about to break out, Citigroup is not looking that good because of dividend here, but Morgan Stanley, Bank of America, Wells Fargo about to break out. So all these banks sectors bullish. So GS, in my opinion, can give us a lot of premium because spike, because it's a $413. If everything moves in percentage base, you can make, let's say if it moves 5%, you can make almost 20 points, and it looks like a cup and handle here. Kind of like a cup. Now it might dip to around this area. That would be a perfect dip buying opportunity, if it comes to around 400, but I don't think that's going to happen. I think it's just consolidating, it's supporting the CMA, letting the CMA catch up. And if you look at the flow here, flow has been really bullish as well. If you look at Goldman Sachs here, $1 million 440 call for 18th of March 2022, which is literally so out of money, 20 points out of money, more than 20 points out of money. So really bullish. And just look at the overall flow, 80, 70, 22% bullish for last week calls. And you can see here, for December of 2021, it's the maximum, I think, bullish premium, and the calls being targeted as $40, $44.20, $4.15, $4.10, and the green is way spiked than the red one. That's a great sign. So everything looking solid with respect to Goldman Sachs. Banks are gonna move, and GS, I think tech might be weak for next week, but GS banks is gonna lead SPY and create higher highs on SPY. They're just setting up for all-time high here. Really nice accumulation going on, maybe 1 or 2 more days, and then boom. Really looking forward to playing Goldman Sachs again. Really solid name, really solid flow. Earnings were phenomenal. A lot of good news with partnerships with AXP, and just in general, macro, TA, and everything is looking solid here. Move on to the next one here. Cost Now Costco, just look at the chart here. It's a bull flag. This stock is non-stop been running ever since I alerted here on the break of this level. It has moved almost 50 points, and look at this volume here. It's a squeeze fire to the upside. RSI definitely is a little bit overbought, but it's nothing to worry about because it has done in the past year. And this is nice consolidation. Now keep in mind that earnings are coming up, and I think what's going to happen is we'll see a run up towards the earnings and then a dump, just like we saw here. Run up towards the earnings and then dump a couple days before earnings. So I think what I'm expecting here is my target levels are I'm gonna draw the fib levels here. One moment please. Yeah, so the way to draw the fib levels here would be this was the previous support area, and then this was the resistance, and then this was, and you can see here now these are the profit targets: 497, 508, 524, and 500 is a psychological number. Once it breaks 500, it can move 10-20 points easily. And Costco is a like a really defensive name because like they have the control to increase the prices for the goods you're gonna purchase. They pretty much can control how inflation affects their pricing. And just looking at this strong move here, it's all-time high, really solid name. Look at the flow here. Flow is also really solid. These were the dividend dates, so I'm gonna change here to 28th and 29th, which was after the dividend, so to kind of avoid the dividend reallocation stuff. But if you look at the charts here, 86% bullish, extremely bullish, and some of these calls are out of money as well. $500 and 520. Like if you look at the maximum premium here, it's not a lot of premium for this name, but this is still out of money call. 505, like it's still on 29th. So of course like you can evaluate, like this is a spread, and there's someone is buying a put here for 520 as well, so we might see pullback as well. But I'm keeping an open mind because it's just a strong name. Let's say that if it breaks down below 481, then next support area is 467, and you can play a downside as well. Don't like, I think, don't just like keep your hopes up for a bullish move. Anything can happen in the market. If it breaks down to from below 486, next target would be 482, and then below that 476. There's this gap here which it might fill. So up or down, either way you can play this, but in my opinion it's a bull flag ready to break to the upside. And then finally, let's look at Mara. Now everyone knows this name by now. Marathon Digital. It's a Bitcoin play, and earnings are coming up. This company has reported fantastic earnings, last couple times. I think there was a surprise here, but again, this is a Bitcoin mining company. Bitcoin price is near all-time high, and this is a cup and handle formation here, and also a bull flag, and also it's right near the support area, so you can manage your risk here. Let's say it breaks down, like in the past it has broken down here when it is extended from, this is an exhaustion here. This was an exhaustion, came back, and then now it's bull flagging here, and then it might retest this EMA. If it does, then this is the support area, 43 area. If it does here, I'm gonna load up to be honest, because this, like here, look at this accumulation here. So really solid name here, looking really good. It's gonna move with Bitcoin, like all the other Bitcoin names. Bitcoin itself is bull flagging here, might need a couple more days. So the plan for Mara is to buy the dips here and this is also a cup and handle breakout. Let's look at the flow for Mara. Let's change the date back to 4 days here, from Monday to Friday, and then let's look at the charts. Again, 60% bullish premium, green spikes are higher, and target here is December and also 26th of November. The strike price is $60. I mean, come on, this stock is right now at $52, and 55 is next one. So way out of money calls here. And also if you look here, these calls here, you know, $60 call here, 637k premium. Some of these are spreads, but most of them are bullish spreads. You can do your own analysis, but I think, in my opinion, this is a really bullish play. And you know, my targets, you know, once it breaks, let's say that, you know, once it breaks the 55 area, closes above it, $60, 63, 67 is fast, depends on how the volume is. And we can play it as intraday as well. I'll definitely watch for intraday as well. You know, once it is above $53, 54 is the next resistance. With respect to support, 47 is support, and then 49.50 is just psychological support as well. So wait for the price action. If it breaks out, buy the calls, buy the swing calls. If it's way too out of money, buy 2-3 weeks out. If it's near the money, around at the money, 1 ATR. If you look at the ATR for this stock here, it's right, this is daily 21. So, you know, let's catch up to the daily. That would be the perfect scenario, because daily 21 can act as a great support. But right now, if you look at the weekly, it's definitely extended from the weekly 21. So keep an open mind. You know, it can play either way, but this is a really strong name like Hut. Hut also looks like it's about to break out. Really strong name. Hut looks better than Mara, but Hut doesn't have weekly calls. Hut doesn't have every week. Hut has monthly calls. Oh yeah, Hut actually has. So maybe we can play Hut as well. Hut has a better setup because it already broke through, and it's near all-time high. So there is a high chance that it will cross and touch the $15 mark. So both are really bullish setups. So let's watch both of them. You know, we can play both of them, but Hut and Mara both will be the same pretty much. Let's see if I missed anything here. Goldman Sachs. Yeah, Under Armour, look here, the RSI also break out to the upside, which is also really bullish sign. You know, this is like a basing formation, saucer formation here. Look very similar here, and look at the amount of move it made after the earnings. Pretty much sorry about this. Yeah, in 10 days, 25% move. It's a solid mover. If you can catch it, that would be amazing. All right, guys. So please make sure you like and subscribe the video. Really grinding my you know, like day and night here, trying to release content, trying to support you on Twitter. For you to support me, like, you know, make sure you subscribe to the channel. Make sure you you know, like, follow me on Twitter. Make sure to like, retweet my posts. Just drop some lovely comments. I love listening to all of you. I'm gonna make a separate video on Discord and everything, details later, but for now, good night. Have an amazing week ahead. I love you all. See you later. Bye.